Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, it is just a buy everything kind of market, buy everything except for June oil, that is. So we'll talk about just the relentless rally in this market, why it's happening and what it means going forward here. We've got earnings as well, a lot of earnings both this morning and reporting after the close today, but it really is just going to be the theme of the show is just buy everything until proven wrong otherwise. But yeah, a lot of stocks up, not a lot of stocks on my down filters this morning. Our guest today, Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. He will join us at 8:35 to talk about this rally and also talk about the closing imbalances trade and why that hasn't worked as well as seemingly the past couple of days or weeks. I'll throw it to Joel now. Joel, give us a quick recap of what's happened here in the overnight session.
I'll buy the dippers around again in full force, Spencer. We had a close right near the high close of the move, 28.69. We got a little dip overnight to 28.51, and they turned it around on a dime. Pre-market high stands at 29.0950, and jogging my memory here, on May 9th, you had a high of 29.07.25. And then I think on that Friday before, I see a high up like in the 3,000 handle. That might have been the day. I can't remember the day where the Fed first came out and they goosed the market and then it gave it all back. So 29.07 and a quarter. That's the highest number I have on my sheet today, folks. The previous day's close was 29.5375. Crude, we're done with the June. We're only looking at the July because June doesn't mean anything. July contract trading up 28 cents at 18.34. Gold, quiet as of late, down 30 cents, but you went down to 17.06. You're flat on the session to 17.2380. Silver slightly in the red, down 1.1 cents at 15.33. Bitcoin, that's up $35 at 7,820. Triple D, let's just pick up on that conversation we had on the pre-market show.
I mean, okay, so let me outline the bull scenario. I outlined it yesterday when I said I think we could go to 3,000. I still think we're going to 3,000. I think we're getting there sooner than later. Here's the bull case, and it's fairly simple. I mean, if you think about it, the market wants us to reopen. Well, that's what we're slowly doing. That's what we're starting to do. We're ignoring all bad news. I mean, our earnings have been terrible. They're buying stocks on bad earnings reports. Spinner pointing out. Hog this morning. The report's terrible. You knew it was going to be terrible. Okay, well, it wasn't that bad, I guess. They did, I'm just looking, they did beat, but, the guidance going ahead, they withdraw it. Caterpillar's report, not good. We're just quickly going through a couple of these reports. We can come back and look at them in detail in a minute, but I'm just outlining the bull case here. Caterpillar, $1.60 versus $1.69, missed. 10.6 billion versus 10.92 billion, miss. Withdraw guidance. I mean, in normal markets, the stocks get killed on this kind of stuff. This is not normal markets. The markets have priced in so much bad news, at least, and you can say, well, no, they haven't. Well, they did at one time, but now the market is comfortable. We're comfortable with 2,000 deaths a day. We're comfortable with oil going negative. We're comfortable with all of these things. And, if the market's not going to go down on bad earnings reports, it's not going to go down on when oil goes negative. And I mean, oil stocks don't even go down with oil anymore. And it's not going to go down, when we have, COVID still running rampant here. It's probably not going to go down. I don't see the catalyst to bring us down here in the next few weeks. I do think we are not out of this COVID. I am keeping a lot of cash in my long-term portfolio because I do think we're going to have some trouble. But think about the next 6 to 8 weeks. Think about the news flow. Well, we're reopening. That's what they want. We have less cases of COVID probably coming because we have flattened the curve. So just because we reopen in Georgia doesn't mean all of a sudden the next day they're going to get new cases. There's a lag there. And it's probably going to take a few weeks before you start to see cases start to go up again. I mean, the testing isn't even there. The testing capacity is not even there to even be on top of it. So you could see the potential where you could probably get 4, 5, 6 weeks that the market could have a pretty good lift here, thinking, hey, we're looking good. And then just think of the positives of, there's a lot of companies working on vaccines. Any positive news for a vaccine, any positive news for a therapy. We saw a 1,000-point rally off a Gilead drug that we don't even know if it works. So you're going to have more positive news like that coming too. It's hard to really find the bear thesis in the short run. In the long run, we're still closed. In the long run, you're going to see a lot of corporate bankruptcy still coming here. In the long run, we still have serious problems. Don't kid yourself. But as a trader, if you are short this market, I think you are early, and you are very early. And it's hard. We were at the battle between the bulls and the bears for 2 weeks.
We did. We
at the 50% retracement.
Yep.
2 weeks we battled there. We are now resolving ourselves to the upside, and there is room to the upside. And believe me, there's room above 3,000 too. There's really room, if you really want to get ugly for the bears, to 313 SPY. And you think about how many people are holding too much cash. I'm holding too much cash in my long-term portfolio. Nothing to do with my trading. My trading account is biased long right now. But my long-term portfolio, I've said all along, I have put more stocks to work. And as stocks continue to dip, I keep buying more stocks because I can kind of read that, hey, this bear case is not working here right now. Does that mean we're not going to eventually tank again? I think we do eventually tank again. But I think that tank could be a long ways away. And then you think, okay, we go 6 to 8 weeks, we could be going into summer. And summer could help this buck because people are outside. They're not going to be, doing as much. So you could really see a scenario where it doesn't get really ugly until the fall again. And that's a long ways away. So I think if you're shorting stocks here, I think you're on the wrong side of the trade.
All right. Well, I mean, all you need to do is, look at your P&L and look at the market. Mixed bag of earnings today. Some really good, some really not so good. I know a lot of companies withdrew guidance, but let's start out with one that was after the close. It's trading up $15.80 at 146.72. That would be F5 Networks.
Huge move.
Did this get pumped by Kramer? I feel like it may have, or maybe I dreamt that. I'm not sure.
Well, Kramer's been pumping everything.
Okay.
He is on full pump mode. He came out last night to watch Mad Money. He came out with this COVID, basically index, and he had 110 stocks in there. 110 stocks. You know what? I was looking at those stocks. I was like, that's pretty good stocks he's put in there. And he's outlined it all. So good job, Jim Kramer, on that. F5, I don't believe was in there. I'm not sure if F5 was in there or not. He listed so many stocks. I may have dreamt it.
I don't remember.
In any regard, it's the earnings that are moving this. And look at what this stock has done. I mean, there is stocks that have come back so far. Valuation was always attractive for F5 Networks. I had it at one time. I should have probably rebought it. It's obviously, its valuations actually on PE multiples been fairly cheap. But it got killed. It got killed with everything else back in March. Everybody throwing everything out, when we got down at 79, 78. Well, you know what? We almost got a double. We're almost doubled since then. That's the problem with some of these stocks. And I'm not looking so much that I want to chase stocks at all-time highs and put on my long-term portfolio. But trading is all about momentum. And the momentum is to the upside right now. So you've got to take your investing and fundamental hat and throw it in the garbage, like I said right now. Because if you think of this market from a logical perspective, you're going to want to sell everything. Because really, when you think about it, we're locked up. The earnings are terrible. Oil's going negative. There's a lot of things to worry about. The market has been climbing those walls of worry. I was worried about a lot of this stuff for a long time too. I still am. And that's why I still am going to stick with a lot of cash in my long-term portfolio, because I do think I'm going to get another shot. And not even that. I'm getting shots every day. I mean, I bought Target on the pullback. You've got to use these opportunities in the individual stocks to buy the pullbacks. Maybe UPS today. Maybe it's a stock that we want to look at on the pullback here. It's down $3.50. Yes, the earnings weren't good. Yes, they're suspending the buybacks, I believe. Yes, they said a lot of bad stuff, but this market's been buying the dips on everything. UPS delivers a lot of packages still, not going away. It's not one of those stocks that I was like, oh, I'd love to have in my portfolio, but it's the thought process is there that the dip probably gets bought. I don't know if I'm going to participate in this one. I wanted to have Target in my long-term portfolio. I'm picking more on the stocks that I want to have in my long-term portfolio, but it's a market where they're just buying dips because you know what? Too many people have too much cash.
So that was a pretty good tangent. You went from F5 to UPS to Target.
Well, who cares about F5? Let's be honest here. We care about F5 Networks. Chat. Does anybody really care about F5 networks? I'm taking us
No,
back to where the overall
no, I just want to say props to F5 networks because they gave guidance, which not everyone's doing. So good. Thank you for them. To them, they gave some Q3 EPS guidance and some sales guidance yesterday. So props to F5 networks. Their earnings are good, but they gave guidance. And let's not. I feel like we're glossing over the fact that, or Dennis, you kind of hinted at it. Suspending guidance is never a good thing, and everybody's doing it.
But
I mean,
why not? They don't punish you for it.
They can.
Yeah,
Why
right?
not?
you get a pass on it. Why not?
I know. I'm just saying it just goes to show that 20% unemployment doesn't matter. Suspending guidance for the year does. Suspending your dividends, suspending your buyback, whatever. So what do you do now if there's a very real, Dennis, you made a good case here that we could spend the next couple of weeks or months going higher.
Yeah. You don't short stocks.
If I've got orders sitting out there that I missed that, by a couple dollars here and there. And
yeah.
I guess I'm just SOL.
Well, you're not. So again, here I just outlined a big bull scenario, but I'm still sitting with what I say, like 65% cash in my long-term portfolio. I'm still sitting with some pretty good cash. I'm going to try to get some more of that to work, but I don't think we're out of the woods by far on this COVID thing. I don't think it's going away. I do believe there's going to be issues when we come back. So, if you're a long-term investor, you think about the next 20 years. I think we're going to have more issues coming up. So I'm not scared that I won't get the stock, that we're not eventually going to have some type of fall off COVID again. COVID is not gone. And maybe you have falls even, and we've had, little scares. The one thing, the only way I can see the bulls really getting derailed in a hurry, like before this 5 to 6 weeks, like I think the bull market eventually gets derailed because I think the reinfection rate is going to start to go back up when we start to reopen. But I think that's 6 to 8 weeks away. That's why I'm saying in the short run, I think we got a pretty good run. The one case where I could see the bull market immediately getting derailed, again, I outlined most of this yesterday, is in the case where people start getting reinfected.
Yep.
Major names that we think are okay, all of a sudden are sick again, like a Tom Hanks, like a Kevin Durant, like people who really never got sick, like Chris Como, like people who really, obviously Chris was pretty sick, but, he's getting better. If those people start to get sick again, that's a whole different can of worms, and that will spook the hell out of the market and be like, whoa, we did not price anything in for reinfection. So the market is not pricing in reinfection. I do believe reinfection is going to occur. Sorry to say. I do believe it's going to happen because I know these coronaviruses, are difficult. They can, some people are saying there's potentially 7 different strains of COVID out there. I don't know if any of that is true. I don't know if anybody knows that is true. But I don't think that just because you have an antibody necessarily means you cannot get COVID again. I don't think it's like the measles where all of a sudden you get the measles shot and it goes away. These coronaviruses, from everything I read, are very difficult to vaccinate because they're not stable either. So that's, the wild card if you're just buying stocks, because all of a sudden we get news overnight that Tom Hanks got I'm not saying
yeah,
Tom Hanks.
you're just saying in general. I know.
A scenario that a major celebrity, Pink had it, a major celebrity, all of a sudden is sick again.
Celebrity.
A major celebrity, like on the, not on the smaller, but on the, like a Kevin Durant, Tom Hanks, Pink, one of those people all of a sudden gets sick from it again, everybody's going to be spooked. The market fall 2,000
Boris Johnson.
Yeah, exactly. Anybody big name, that all of a sudden, that we think is fully recovered and has got through it, the market is not priced in that. So that is a major risk to the bull thesis, but I don't see that happening, anytime soon. I hope it doesn't happen anytime soon. So I've outlined a pretty bullish scenario here that I think there's room to 3,000 and maybe a little bit above. I don't think we're going all-time highs because I don't think we're out of the woods, and there's a lot of things to still consider here. I do believe there's going to be some corporate bankruptcies coming, especially from the oil patch. There could be a lot of other issues as well if people are still spooked and not willing to go out. But with that being said, if you're short in stocks, and this is what I've learned in my 20-year trading career, when you're putting on a trade and you start losing money, you're on the wrong side of the trade. And shorts have been losing money for the last 3-4 weeks here as they've been trying to say, this is just terrible. And you think about it, you think about the fundamentals and the logic, and you're like, how in the hell can the market be rallying when we have record unemployment rate, when we have oil going negative, when we have 2,000 people dying a day? How the hell can the market be going up? It's climbing that COVID wall of worry, something fierce, and it is punishing the shorts, but also punishing the people with too much cash. And every time we get a pullback, the shorts scramble for cover, and every time we get a pullback, the people who have too much cash are trying to put it to work. And that's me.
All right. One comment, and then just finishing up with FFIV. You hit 149 in the pre-market. There's a monthly high at 149.50. So if you're looking for more meat on the bone, nice round number like 150, they could easily pop it above that. And so maybe use that as a target. Also, I think Sal pointed out in the chat, what do you have going on in November that you kind of want to keep the markets perky for, right? You
Well,
got
the election.
You got the election.
We didn't even talk about the Fed. Fed's, if the stock market starts tanking, they'll start buying equities. You got the Fed put. I mean,
you got the Fed put, you got the election put. I mean,
election, yeah, they want to keep. There's a lot of reasons why this market's going to continue to be, for lack of a better word, manipulated higher.
Well, let's not also, we talked about, what it would take to flatten the curve and what that could do to people's feelings here, and let's not underestimate the effect that's having. I mean, the curve is undeniably flattened, and both for new cases and for deaths.
This whole rally has been a flatten the curve rally. I tweeted it out. Go look at my Twitter stream. 3 weeks ago, I tweeted this out.
Yeah.
And we were at 240 SPY.
And that's what we said we wanted to see, and now we're seeing it. So I guess why are we
seeing the flatten the curve rally?
Why are we surprised?
Now we're seeing screw the shorts rally. Like the market likes to punish the maximum amount of participants. There's a lot of people who are still bearish for logical reasons. It's punishing logic right now. We're back to punishing logic. Market is not trading on logic. It is trading on fear. And the fear is the fear of missing out. That's what it's trading on.
So now the question is, what? And we kind of posed this yesterday, but what about all those people, the record amount of people who sold and went to cash last month?
They're scrambling to get back in. They're like, they're screwed right now. They're like, I sold back when we were 220 or 230 SPY. I thought the world was imploding. It looked like it was imploding then. And it's funny, these money managers on CNBC, it's sickening to a certain extent. You just watch it. Maybe it's selective perception on my part, but it seems like every money manager, I sold in January and our signals told us to buy in mid-March. I did sell in January. I didn't buy in mid-March. I'll admit it. I didn't buy the lows. It was there for 2 days. 2, 3. I guess we were there for a week. But everybody, congratulations to those who really did buy in mid-March. I didn't start buying till late March, early April, when I was like, oh, I think that we're not going to retest. When I was buying, we were talking about that triple bottom back in the beginning of April when we were like 245, 245, 245. I was like, if you got too much cash, I might have to start putting some of that to work. That's when I bought Microsoft, Activision Blizzard. I was buying stocks that I thought, would be okay even if we went down to retest. Those have worked out very well. I wish I would have went 100% back into the market then. I did not. I nibbled. And I bought about 12 stocks total in the the course.
You know who told you to buy Microsoft?
Who was that?
Josh Rasnick.
Oh yeah, it was Josh on the show. We should have Jason's son. It was Josh. Thank you. It was Josh. Peloton too. I bought then. Peloton worked out.
Well, that Peloton's because of me. I've been telling you to buy
the Peloton. So you got me talked into that one. I got the Peloton. I actually sold it and then I rebought it, and I actually really didn't do that well in my sale, but I rebought just around that third. Well, just in here really. But I mean, you look at this market and you think about everybody's positioned on the wrong side. So let's squeeze them a little bit for a few weeks because it's going to look rosy here for a few weeks. We're not out of the woods. Don't kid yourself. We're not out of the COVID woods. I don't think the world is going back to normal anytime soon. But with that being said, we could screw the shorts.
You know what? One thing, and I'm kind of kicking myself. I think I don't know if I talked about it with you, Dennis. How when things were really heating up on the weekend, and obviously the spoos don't open until Sunday at 6 p.m. That weekend Wall Street or whatever.
Yeah.
Remember that?
Is it working or not really?
No, it doesn't. It doesn't. They were totally. They've been. I've been watching it. But what they had, and this was at one point where they have this thing that says, our clients are, and it was one point where it was like 64% of our clients are short, and I'm like, oh my God, if you ever talk about a fade trade, and that was, I'm not sure what it says on the site now, but I was just thinking, oh man, that was a great contrarian indicator. But SPOO's still up 36.75 here at 2905.75, bouncing around here between like 03 and 08. Jonathan Corpina coming on at 8:35. You want to do a not so good earnings report, or
I got a couple of requests here first.
Sure, go.
And we could talk the airlines. And Mike Brenton on Twitter, he wants to talk Boeing, and we haven't talked Boeing for a couple of days. And Boeing's lack of participation in this rally has always been concerning. There is no participation from Boeing whatsoever. And the airlines themselves too. Some of the airlines like LUV are making new lows on the move here. Again, we've been talking about, ground zero stocks and not that well. But you know what? Even the ground zero stocks, like the retail, it's the Carnival Cruise Line. Some of them were even getting a lift there yesterday and a big lift here this morning. We have not seen a lift in the airlines, and we have not seen a real lift in Boeing here in the last couple of weeks. Are we due for that? That's the question. So Boeing has a headline out last night. Spencer Israel can go to the Pro and read us that headline. I don't know. I'm so scared to own a stock like this because I think they have so many problems that I don't know if I want to just buy problems. But we saw a huge dash for trash yesterday. Maybe it's inevitable that they're eventually going to buy these stocks too. Can you read us that headline from the Pro?
Well, they also had their annual meeting yesterday.
Yeah, to give us some highlights.
So the CEO said, my biggest takeaway was that he said that there's a real chance that the airline industry does not return to quote unquote normal for a couple of years.
Yeah, it's true. He's right. It's not going to. Is it going to matter? Or are they going to start just buying stocks anyways? I don't know.
Well, we always say the market's forward looking. How far away is it looking?
2 years and ahead.
Maybe. But Boeing did say they're resuming their 787 operations at their South Carolina plant on May 3rd or May 4th. So
yeah.
we're getting that reopening that we've been wanting to see here. And I saw a headline this morning that the big three in Detroit are targeting what I see. I saw mid-May for that, right?
Yeah.
So May 18th. So, it's happening. But to Boeing's point, the CEO didn't sound overly bullish yesterday.
You know what Boeing has to do? They got to find something else to make besides airplanes, because there's going to be an oversupply of airplanes. There's going to be consolidation in the industry. There's going to be less people flying. I mean, unless they have, there's a bunch of old fleets out there. There's going to be plenty of planes out there available for less people flying. So I see absolutely no reason to own this stock under any circumstances. Where's the demand going to be? There's going to be not all these airlines are going to make it. There are going to be less people flying. There's going to be more planes out there. Who's going to need more planes? And who's going to need new planes with potential problems?
Yeah.
I'm hands off on this one.
I'm very torn on it too. My spidey senses say buy it. That's just what the spidey sense is. My gut says I cannot stomach that stock. It's like, but the spidey senses are saying that this could actually go up. You know what I'm looking at is General Motors and Ford. They have real problems too. Don't kid yourself. People aren't, their margins are razor thin, and there's nobody, we're in a recession. Don't kid yourself. We're in a full recession. People aren't going to buy new cars. Not enough people. GM and Ford. GM goes yesterday, suspends the dividend. They're in full cash preservation mode here. What's the stock do? It rips higher. And it's up here again.
If they're going to buy a car, they're going to buy
Ford
Tesla.
Rips higher too. Ford's
not going to buy a Ford or GM. Just everyone's going to be driving Teslas.
But I just look at the Ford and GM price action on really, not great news and a real bad overall situation. And I think, why can't Boeing do the same thing? That's why I would not be short Boeing. I would not want to be short Boeing.
No, I'm not saying I would not be short.
No, I know.
Yeah.
I'm scared. I think I can't stomach it to own it. But I think I wouldn't be surprised if it rallied. I wouldn't be surprised if we started ripping here one of these days, just because the money managers are scrambling around looking for something that hasn't gone, combing the ditches, looking around for something where it hasn't moved.
That was my question.
Might eventually start picking on the airlines. The Delta's right near the lows.
That was my question here. The airlines and the cruise liners have not joined the rally.
Cruise lines started yesterday, and they're continuing here today. That's a tell for the airlines. So RCL is up another $2.50 here this morning. Yes, they got some money. I believe one of them did. I'm losing track of all the headlines that are flying through, but they're all up significantly here. LUV, disappointed. The only way LUV was going to go down on this report was if they did some dilution, and that's exactly what they did. This is exactly what they did. They're offering another $1 billion in convertible notes. They're also offering 55 million shares or common shares. So full dilution, trying to raise money on their own. Anytime you have dilution, the stock usually is going to go down. With that being said, there's money managers here who are under invested in overall market. They might start picking on the airlines. I'm not going to put them in my long-term portfolio. Would I trade them from the long side? Talk me into it. I
Okay.
could be talked into this. I'm really on the fence. Part of me wants to buy the airlines and Boeing just for trades. Part of me wants to do that because I know where my out is. I mean, LUV is making new lows on the move. It's difficult. But if LUV, for whatever possible reason, can close positive today, if it can, I'm not saying it's going to, but if it can, that would be really impressive. That would be a good tell. So if LUV could go green on full dilution. Delta trading up here a little bit, but it's been sitting near the lows. We know JetBlue had earnings here this morning too. You can go to AAL. All these things are in the gutter. All these things have not went. All these things are near their March lows or below their March lows. If you're looking for something that hasn't gone, it's the airlines and Boeing.
Yeah.
It's just so bad. So it's so, but like logic says to me, stay the hell away. But my spiny senses say money managers are going to start picking on those pretty soon too, because they're scrambling for anything.
Boeing, or I mean, if you want to be talked into the Delta, then I'll just tell you that you made it a low of the move at $20. You're just hanging out here. You have strong institution accumulation, not lifting offers, but being very choosy here between 20 and 21, maybe 20, 21 and a half. And then all of a sudden, you're going to be at 15 and they're going to be puking it out and it's going to go to 10, or it's going to catch a bid and you're going to see it at 33, 35, 37. So that's
you have to find out here. We always talk about we want defined risk. And if you're looking at Boeing, I would say the low of the recent move, the April low 120 would be my stop out point. So you're buying it here at 130, but they're very similar to GM yesterday, where they didn't say anything really good, but the stock rallied anyways. So I just think we're at this point where the market wants to rally. And the overall market might just, rising tide lifts all ships, and maybe a rising tide lifts the planes too. I don't know how that works because they're in the air, but maybe a rising tide lifts the planes now too. I would not want to be short anything. And there's a lot of people who are banking that the airlines are in a world of hurt. So there's probably some people who are short these things right now.
Dennis, the argument for Boeing or the airlines is you haven't missed it yet.
Exactly. And think about if you're a money manager sitting with too much cash, you're like, what can I buy? And you're not a tech fund. You're like an overall, just an active money manager. You can buy whatever the hell you want. You might look at these. I mean, look at the hotels. They've come a long ways back from the lows. Everything has come a long ways back from the lows. Even Kohl's and Macy's ripping yesterday. Retail's been ground zero. Is Kohl's and Macy's stocks I want to put in my long-term portfolio? Hell no. But are they trades right now to the long side? Probably. Scrambling, catching shorts. People are like scratching their head. How can the market be going higher? That's what the thought process is here right now. How can the market be going higher? It is.
Yeah, the earnings don't really matter much because we know they're going to be bad. So beat or miss, I guess you're just buying it. But there's actually one non-earnings
what do you got?
Big mover. I want to look at Smile Direct Club here this morning. SDC. This one is up 30% almost off a PR that I guess it's good news, but I don't know if it's worth 30%, but it's good news that they got a patent that gives them an 18-year head start, and they also said they're going to start to reopen some of their shops. So SDC is rallying huge off of that PR this morning.
Look at this chart yesterday. I wish we would have saw this chart yesterday when they were doing the dash for trash. Just sitting there for 4 days, consolidation station, wanting any piece of good news to just rip the heads off the shorts. And then whatever it is, they just find a headline even. We'll find a way, the silver lining in this to just rip the heads off the shorts. And that's exactly what they're doing here today. You see a chart like this, folks, in our chat on any other stock, let us know here right now. I'm looking at the chart yesterday, not with the big candle today, but looking at yesterday's chart. When it's just sitting there for 3-4 days, consolidation station, we call that, itching to go. And obviously, now,
inside day yesterday on low
inside
volume.
Day. That was just a technical setup. I didn't look at SDC chart yesterday. If I did look at it yesterday, I might have been long it right now. So I wish I would have saw that chart yesterday.
Trading at the highs of the pre-market session, got up to 7.25. I was looking at the dailies. You do have a high there, but I think people may be interested. If you're looking for more on this, this is called 750. That's not far away. 745 and 769. That's splitting a couple highs from March 9th and March 10th. And then after that opens up to 840. But you want to see it clear that 7.5, get into the 8 handle. And when this thing runs, it usually runs for a couple days before it stalls out. So this is the first day of the move here in SDC, trading at the highs of the pre-market session.
That's the other thing is like these moves, these big moves like STC today and QTNT and DCPH could linger for a couple days. So,
why not?
Yeah.
I mean, you could see you got people caught here now. I'm going to just reiterate too, like people, I gave the same scenario yesterday. I talked about all this stuff. Rewind the show. I did the same talk yesterday on the bull scenario when we're 285. Now we're 290. As we continue to go higher, you want to pull back before you're really buying. But, I'm looking at stocks that are pulling back, individual names that are pulling back, as those are the ones that I potentially would buy. Am I chasing the SPY and buying SPY in my long-term portfolio right now? No. But I will buy stocks on pullbacks here that I want to own. So I'm outlining a scenario. Always forget about everything I just said. You're always buying dips and selling rips. For 21 years of my long-term trading career, that is how I've made money. I learned in my first 6 months, and people ask, I just did an interview just about the beginning of my trading career and things that I learned. What I learned in my first 6 months of trading, because I did everything wrong in my first 6 months of trading, I lost money. This is back in 1999. I learned when I jump on a moving train, I usually fall under the tracks. And what I mean by that is when something's ripping higher and it's up 10% and I buy it, it goes up 3, 4, 5, 10% in a matter of seconds or a matter of minutes, and I want to buy it, and I buy it up 10%, then I look and I get hit. So what I learned was, if I'm bullish, I'm buying dips. If I'm bearish, I'm selling rips. And, in this market, it's paid to do both. Buying dips and selling rips. You know what? We're going to get a dip again. We're going to get another dip. That's your opportunity to get back in. Think about how many dips we've had in the SPY in the course of the last 2 weeks. Look at the red candles. There's been some significant dips in there. And, it's hard. It's hard to be a contrarian, but it has worked very well. Not only in the last 3 months, in the last 2 years, it has worked very well. 2019 was a year of fading moves as well. There was lots of moves to fade. Yes, the last 3 months we just ripped higher and we just went. But before that, really from 2018, you can go back and look at the charts there and look at SPY. From the beginning of 2018 till, say, October of 2019, we're in a choppy market. We were chopped up. We were out of it for 3 months because we had the ridiculous rally and maybe into the first month of the year. But again, we're back into where fading the moves works. Now, again, I've got a bullish scenario, so I'm not selling the rip here today. But, if we get some bad news, something happens, maybe, there's, something that happens. I don't know what the headline's going to be, but there's always like a headline. That's when I'll use the opportunity to buy the dips because I have this overall bullish feeling going on right now. That could
You want to see an interesting chart that someone pointed out? You said
yeah. Give me them.
Interactive Brokers.
Let's go check it out. I like that. IBKR.
Yep.
It's kicked up, and obviously, we got back up. It was a nice candle yesterday. You're right in here. They're on this $40. I don't mind that chart. I mean, it's a little bit, and you gotta look what the other brokers have done too, but they've all been taken over, I guess. So it's hard to tell. They're trading off the banks. Again, financials too, have not performed great. I'm not in love with the banks because we've got so much bad oil loans. Now, IBKR is not the case. Obviously, IBKR is all trading. I know I have an Interactive Brokers account. I know what they are. I don't mind that chart. I would say you stop out below the lows, though. I like there's companies I would like better. I just trying to stay away from.
It just got hit off earnings.
They got hit. Some people got burned on that crude too. That Petterfee, remember, was on CNBC saying there was some people on his that blew out their accounts probably when crude went negative on that June move. So on that May move.
And then you found a buyer in the 38 handle 4 days in a row.
I like 38.
A little bit of institutional accumulation here, and you got a gap to fill. I mean, it's like you said, this big volume yesterday too on the up day. So that bodes well for the stock. Trading a little bit up in the pre-market, but you're right. This the financials, they really haven't lifted like some of the other stocks. You got our guest lined up there yet, Spencer?
I do. Let's bring him on. Jonathan Corpina is a senior managing partner at Meridian Equity Partners, joining us normally from the floor of the NYSE, but these past few weeks or few months from his home. Jonathan, good morning.
Good morning. Can you guys see me?
I'm about to.
Oh, there we go. There we go. Start my video. Just want to make sure you can, I had this set up the right way.
Yeah. Have you gotten any word, Jonathan, on when you may be going back to work?
No word yet, but I've had a lot of productive conversations with management. There was a community call last week, and the message that we're hearing from NYSE is that clearly they want to do what's the right move and the safest move, and make sure that everyone is going to be healthy coming back. The NYSE has said that they want to open back up as fast as possible, but in a manner in which that's socially acceptable and keeps everybody healthy. So right now, there's no firm date set in sight. What we're using as guidelines is kind of what everyone's using and what everyone sees in the news. We're watching the comments that come out of Governor Cuomo. He's got the stay at home in place until May 15th. If he lifts that doesn't mean we go back the next day, or if he extends that doesn't mean that we're extended for a longer period of time. I think the NYSE is going to use that somewhat as a gauge to see how they should unroll and come back to work. NYSE is considered an essential business, so as soon as it's safe enough for us to come back to work, that's certainly what's going to happen. So in my opinion, my guess, I think we're going to be home for most of May. There is a large rebalance at the end of May. The MSCI is the last day of May. Could we be back for that by then? I don't know. I think many people on the floor and off the floor are hoping for that. But once again, it's all a question about being safe and getting back to work. You throw in all these different components. Most of us who work on the floor come to New York City through mass transit, right? So whether it's trains, buses, there are boats that come from Jersey, boats that come from Long Island. So I think there's going to have to be some workaround with that, because we want to make sure that everybody who works on the floor isn't going to be in crowds coming to work.
Right.
And then I'm sure the exchange is going to put some policies in place as far as testing coming in, whether it's every day or a certain program for that. If you recall, when we left the floor, they were taking our temperature every day. So I'm optimistic that we're going to get back. I think if we see some of these national headlines of what's going on in South Carolina, Tennessee, Oklahoma, Georgia, these things are slowly rolling out. So it's going to be interesting to see how that translates to the Northeast.
We're on the line with Jonathan Corpina from Meridian Equity Partners. I'm not sure if you were listening before you came on at all, but we were just talking about the mentality of the market and just, the potential optimism here. You're seeing some of the institutional order flow from your post. Well, not your post, from your desk, I guess.
Yeah.
Is there a little bit panic setting in here that, man, I should have bought the dip and, trying to, find stocks that haven't moved yet? Or is it more, well, I missed some of the winners now, but I'm not going to look back. I'm going to keep going with, with the winners in the market?
Yeah. It's interesting. And if I look back on where we were, in the beginning of March and how the market traded, and as the news lines were really snowballing and the market was getting tremendous amount of pressure on it, that first 10 to 15% of our downside when the market turned, I certainly felt panic selling. And it was the right move and it was the right sell at the time. As we got down to lower dips, I think from what we've seen is that our customers kind of, waited on the sideline to see if the market was going to take one or two more legs down. And once we hit that bottom, I don't think anybody was convinced that we were bouncing directly back up, but it seems like we have formed that formation. I think at this point right now, we've gotten to a level, which is a very interesting level, because we're at the point where people really need to start deciding, where is the next leg? Is it up or is it down? You're not too close to the bottom where you can still hang out down there. And we haven't completely skyrocketed high enough where everyone says, I think I've missed the boat. We're getting to a point where we're right at that seesaw line, and investors are going to have to make that decision. From what I'm seeing right now, I haven't seen the money really come back in just yet. I think we're still waiting for, and I think most people can agree that, this V formation that we're talking about, I don't think continues on a straight upward trajectory. You guys are talking about earnings season and misses. Yeah, we already know what earnings season is going to look like this quarter and probably for the next 2-3 quarters. And CEOs and CFOs are going to have to use the coronavirus as their guideline and their somewhat excuse moving forward. So there's earnings season is somewhat immune to the market at this point right now. I think what's really going to move our markets is going to be, once again, the coronavirus numbers. If our numbers continue to get better, I think investors are going to feel that a soft reopening of our economy in some of the lesser hit areas and then move to some of the more hot spots is going to help our economy come back. But interestingly enough, you guys are talking about the airline stocks and the amount of immense pressure that's been there, and scooping up these stocks that are low priced. But you just think about it, when are people going to start traveling again? When are people going to go to restaurants again? When are people going to go to a concert or a theater again? When are you going to sleep in a hotel room again? I can't envision that anytime soon. I'm hoping I'm wrong, and I'm hoping things certainly change. But there's so many areas that are out there that is unknown, and the effects on our overall economy certainly plays into that.
Jonathan, I agree with you, and it's hard to be a long-term investor in some of these sectors right now, like restaurants and travel stocks and the airlines and even the casinos, because I don't think it's going back to normal anytime soon. But with that being said, there's just so many money managers, I think, that are scrambling around trying to get money put to work because they think they've missed it. It's like the fear of missing out is bigger than that. So I think in the long run, I think that's going to be right. I think eventually some of these stocks are really going to struggle. But in the short run, could we have that trade continue here, where first you have people who are betting on exactly the thesis that you're saying, where you probably have people who are short these stocks saying none of this makes any sense, so we might as well squeeze them a little bit. And then you have people who are just like underinvested and looking for a home for their cash and anything, and they're looking, maybe some of these airlines, they haven't went up yet, so maybe they just ignore it all and just buy them anyways.
You were talking about how you've been trading for 21 years and starting in 1999. I think all of us who have had this experience like you've had and I've had, we look back to 2008, 2009, and I'm not drawing comparisons as to how we got here and why we got here, but in 2008, 2009, there was massive panic and massive hysteria. People were lining up at banks trying to get their cash out, not knowing if the ATMs were ever going to work, right? And the market and the economy eventually rebounded from there. It took time. It took a lot of programs in place. It took a lot of financial discipline, but we rebounded. And when I say we, I mean our economy. And you look at stocks that were trading, Citibank that was trading at $2, that eventually skyrocketed from there. So I think what people are doing is they are drawing a comparison and a parallel to stock prices now and stock prices back in 2008, 2009 during that crisis will rebound. How much time will it take? How long is your pain threshold? It took years from the 2008, 2009 financial crisis. Are we years from our bottom now? I think that's where investors are really looking at these opportunities. And if you're able to wait out years, right? Because we're talking, casinos and airlines and air travel and hotels. If you're talking about years and people can hold out and wait those years, they are going to get back to normal. Those sectors are going to get back to normal. And now is the opportunity to get in there. Other people just don't have that pain threshold. They can't sit through 3 more quarters of air travel being at only at 20%. We did see the TSA numbers pop yesterday to 128 travelers going through all TSA, 128,000 going through all TSA programs. So I think that's somewhat of a positive, but very, very far off that 2.2 million travelers that travel every day on an average daily basis.
Jonathan, how did you get down to work? Did you take a train or?
Yeah, I'm a train guy. I like the schedule. I like my routine. I like sitting on the train and listening to podcasts and reading. So
PreMarket Prep. Do you like to listen to PreMarket Prep?
Absolutely. Okay. Some of it I'm in Grand Central tunnels, so we lose a lot of cell service there. But that's something that I just kind of like for my routine. That's clearly going to have to change. I will have to, once the NYSE reopens, I will be driving in for quite a period of time. For 2 reasons. One is, I think it's just going to, with less people working in New York City, the commute and the traffic is going to be much less. And, two is I want to keep myself safe. I want to keep my coworkers safe. And I think driving for me is going to be the best option.
What the heck are they going to do on the floor?
So what I think they're going to do is kind of like we're seeing in restaurants in Tennessee right now. They're going to take a capacity level, a capacity number, and cut it in half, or maybe cut it by 3/4. We don't know yet, but I can surely see that like restaurants that have a 100-person capacity are now operating at 50 at a 50-person capacity. So on the floor, what I think they will do is cut that number and say to a firm like Meridian, we've got 16 traders on the floor. They're going to say, John, your 16 is now 8, or your 16 is 12, or your 16 is 6. We don't know what that's going to be. It's certainly not going to be 16, and it will be a number that we're going to be able to manage and make sure that we service our customers appropriately. But they are going to institute social distancing. Our trading desks on the floor are no different than trading desks off the floor from a visual and technological aspect. So no one's going to be sitting next to me. Probably it's going to be 2 or 3 seats over where someone will be sitting for me. When we go out to the post, are the market makers who normally stand in front of the post, will they be behind the post? Most likely. Would there be some lines outside the post that keep us a distance from getting too close to the post, and we can still maintain our vocal communications? Right. I think something like that. So I think they're certainly thinking about this. I put my 2 cents in to the exchange and to management, and I think that we're going to come up with a really good plan that works for everybody.
Have they given you any timeline or anything, like where we're looking? Any timeline?
I think we're still right now in our minds, and this is me talking, this is an NYSE talking, as a business owner and operator, in my mind, I'm continually watching Governor Cuomo and what his comments are. We've got this 6-state coalition that seems like they're all kind of moving in the same directions. Keep in mind, we've got workers in New Jersey, Connecticut, New York, and Pennsylvania. So all these, that affects all of us. So that May 15th date that the stay-at-home has been in place for, we're going to wait to see what happens there. Like I said before, I think May is going to be a long month, and we're not going to spend much time on the floor in May. Is there a chance we get back at the end of May, maybe after Memorial Day? That is a short week. It's a 4-day week, but yes, that last day of the month is that MSCI. Seems like a good balancing point that we could probably work something in there. But it might get pushed out to the first week of June, second week of June. And then overall, just keep in mind, end of June, I'm looking far ahead. We've got the big, massive Russell at the end of June. NYSE is going to want to make sure that, facilities, trade ops, traders, floor firms are going to be up and running as best and as possible and as full as possible by that date. So it's going to take us time to ramp up to that end of June date. So I think if we start getting going in the beginning of June or the end of May, that'll give us enough time to get to the Russell.
Also, Jonathan, I just wanted to ask you, we had you on a couple of weeks ago. We were getting some wicked moves at 350, and you talked about, not as a floor broker, being able to see the imbalances earlier, being able to offset. And did you put like a Zoom grouper together or something? Because it seems like these imbalances, which is good, for the market, it's either been a fade or been quickly offset. Can you just comment on that, please?
Yeah. So let me just conceptually, at 350, the imbalances come out, and that's when the world sees it. Everyone who has their data feed see it at 350. In a normal environment, when the New York Stock Exchange is open, floor traders are exclusively get that information starting at 2 o'clock. So we provide that information from 2 o'clock all the way up until 4 o'clock to our clients. So what's happening now is that everybody is seeing it at the same time. So everyone is reacting at the same time. You sometimes get that snowball effect, kind of like when the Fed makes an announcement, the market spikes or the market, drops, and then it comes back to where parity is. So at this point, everyone's kind of chasing the same trade at that point. We see the markets up today. I'm looking at my screen now. We've got about 400 million to buy on the opening this morning. That's a no-brainer. We see what happened overnight and what's coming into today. What's interesting is that the NYSE now is going to submit a rule amendment to the SEC to see if they would approve a rule in which floor member firms, NYSE member firms, could have access to that information at 3 o'clock as opposed to 350 now. So once again, we used to get it at 2 as a floor member firm, as an NYSE member firm. We're now getting it at 350. since we don't have that technology in place, there's an appeal to the SEC to see if NYSE member firms like Meridian can get that information at 3 o'clock. If that occurs, we'll be able to publish that, and we'll be able to disseminate that information, translate that information, provide that to our clients, to your clients across the world, information that's going to be coming out sooner. So I'm hoping that something like that comes in place in the beginning of the May. No firm rule yet, no firm date yet, but it's a concept that we've been talking about. And I think that's something that might be clearly helpful for everybody.
All right, we've been on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, thank you so much for the time today, and be safe out there.
Gentlemen, have a great day, and I look forward to talking to you from the floor one day.
Yes, one day soon, we hope. All right.
Yes,
Thanks,
that's
Jonathan.
true.
Thanks a lot,
Thanks,
John.
guys. Have a good day.
All right. So that brings us to 8:51 here now.
Yeah.
Do you guys want to go?
Let me give you a look at the imbalances. We were
Yeah.
talking about them there. I'll give you the opening ones. Obviously, I can look on an individual stock basis here. Just highlights. A lot of them are to the buy side, which is to be expected on a day that you're up 40 S&P handles here. But if I give you some highlights, Coca-Cola, 220,000 to buy. Pepsi, I believe, did report here this morning, so that can impact the Coke movement as well. Pepsi is trading higher. Bank of America, 281,000 to buy. AT&T, 260,000 to buy. General Electric, 613,000 to buy. On the sell side, I do see Johnson & Johnson, 82,000 to sell, and J&J. I also see Procter & Gamble with a small sell imbalance of 42,000 shares. I believe Peltz dumped some stock there last night, was announced just coming across on the filing from the SEC. Trian did sell 7.5 million shares. Obviously not yesterday, but it hit the board yesterday. I'm not sure if that was, actually they had sold some before too, just a couple of weeks ago. So it looks like Trian's lightening up on their Procter & Gamble stake. So that might be a reason why it has a sell balance. Again, PG sometimes moves counter to the market too. So when you see the market trading higher, sometimes PG trades lower. Just like yesterday, market's trading higher, PG trades lower. We've been talking about those COVID stocks doing the same thing. That's pretty much Ford, 1.5 million to buy. That's big for Ford. And Ford's obviously trading up significantly here this morning. So you're seeing mostly the buy side.
Do you want to go through some more earnings here? Because we got a couple minutes left here.
There's quite a few coming. I mean, we're in the heart of earnings season. So from this morning, you got 3 or 4 Dow components in there. Merck reported, 3M reported. You had Pfizer reporting. You had, UPS, I don't know if we covered, but it was reporting. There's a lot of reports to talk about.
Yeah, let's do Merck and Pfizer together. So
Sure.
Pfizer out this morning, their EPS beat 80 cents for 73 cents a share. Sales 12.02 versus $11.8 billion. They also gave some guidance for the year, EPS and sales guidance, both of which came in line with expectations. So a good report for Pfizer. I'll get Merck here as well at the same time. Merck, same story, a beat on the EPS, a beat on the sales, and guidance for the year in line with estimates. So actually their EPS guidance was light. I take that back. EPS guidance was light, and sales guidance was light. So a little bit light on the guidance for Merck, but in line with the earnings, and Pfizer was good across the board.
I own both these stocks in my long-term portfolio. I would just say the bar is set actually higher for these stocks. Any healthcare stock that's reporting, the bar is actually higher. So we talked about like a Harley-Davidson bar being buried in the ground, and Hog did report here this morning. It's like the only way they're, and LUV is the same thing. The only way they're probably not going to go up is if there's dilution involved in the report. If they announce something that's dilutive, LUV did do that. Hog did not. Hog's trading higher on a disappointing report. Going back to Merck and Pfizer, the bar is set higher for these stocks. Pfizer is actually trading higher this morning. Merck is trading lower, but these stocks have performed very well for a long time. So I would say, that low bar thing that I've been talking about doesn't apply to pharmaceutical companies.
Can Pfizer open up that high, Dennis? I see 263,000 shares have traded up 89 cents at 39.22.
Yeah, I think it can. I think it's 39 projected opening right now. So if we're just looking at the floor, you're in there. I mean,
that's a lot.
116,000 to buy is the imbalance on it. So
yeah, if you're buying this thing off the open, you want to see it like open and go straight up and hold. 39.50 at your pre-market high. Merck trading in the red as we speak here. Let's see, the stock had a nice recovery. Getting hit in the pre-market low right at it looks like you got a sneaky buyer here, 81.62, 81.82, kind of
Define
looking
sneaky
around.
buyer. You say that a lot. What do you mean by sneaky buyer? Let's do a quick 2-minute education. Sneaky buyer.
I'll show you a real sneaky buyer.
Yeah, show me a real one. Sneaky. We like these sneaky buyers.
Look at this Nordic American tanker shipping.
That thing isn't sneaky. That thing's just being bought.
No, look at September. Okay, when the market's ripping higher, right? No one's thinking about anything bad. Okay, and this thing goes down to $1.90. Or I think it even went lower than that.
$1.66.
Yeah, $1.66. And look at all those days where it traded under $2.
Yeah.
Yeah. I mean, just nice accumulation. I mean, who knows what they were looking at
I
that
mean,
time.
you've got somebody just accumulating stock.
Yeah, they were just like, they're going to buy everything they want under $2 for a month. And that was their plan. And they didn't show
They did pretty
bids.
well.
Yeah, they did. Yeah, they did. But
what are your thoughts on these things? I mean, like, let's go back to NAT for a second, because you talked this stock and we haven't talked the tankers, and they've been moving. We gave a list of them yesterday. They continue to run today. Like I said, that CEO interview of of NAT from Friday night was one of the funniest interviews I've ever seen, probably because he had such a strong accent, but also just the stuff he was saying was, we're just bringing and making so much money right now. You just don't hear CEOs say stuff like that. Because they don't want regulators coming and breathing down their neck. But I mean, the stock was $6 when he started talking like that. It's $8 here now, so up 30% since that interview on Mad Money Friday night. What are your thoughts on this stock?
It has a story, and it has momentum, and it has the bots. So, if you want to, if you want to step in front of it, then try and step in front of it. A whole number like $8. We got up to 8.18 today. Potential exit point. But how long is this going to go on in the market? When is the glut of supply going to be relieved? So this could go on. I mean, momentum.
Could go for a while.
Store. Yeah, I'm not shorting it. Yep.
Not shorting it.
Nope. Hard to short it. S&P just bolted to 29.13, riding off those buy imbalances here, pushing higher, up 43 handles here at 29.12. So pushing it in, they want to pop those buyers off the open at the highest price possible.
And you see this, and you're at a case now. Okay, we outlined a big bullish scenario. We're going to 3,000. We going there today? I don't know. I think it'd be you're still going to get some pullbacks along the way, but I do think we're going to eventually get to 3,000 in the next week or two. And I think if you're buying pullbacks here, I think you're going to be happy. So, that can change. A headline could change all of that. And, obviously we got some Gilead news coming on their drug, but I mean, and I do own Gilead, full disclosure. I just mentioned it, GILD, and people were asking me about it. I rebought it in the 76 handle. I'm up 3 points, and I was almost tempted, because it is kind of a coin flip here on what this data is going to look like for this drug, and everybody's kind of just waiting for it. But it's not going to just impact Gilead; it's going to impact the overall market. So it's a very important data piece that people want to see. How is the drug doing? Is it helping people? Because that's what the market wants more than anything, is some type of therapy.
All right. I just want to mention Zoom real fast here, because I mentioned this to Dennis before we started. Zoom joining the QQQ goes into effect as of the end of the month. So that's Thursday after the close. So we've talked about this on the show previously, how stocks can run up ahead of reconstitutions and joining indexes or getting booted out of indexes. So Zoom joining a big index on Thursday afternoon. I would be watching that one today, tomorrow, and Thursday.
If the market's right about what's going on, Dennis, shouldn't these stocks just be getting annihilated? Zoom and Teledocs?
Eventually. I said I'd watch Teledoc and I'd be taking profits. Yesterday, the candle went up through 200, kissed people through 200, and then kind of closed weak. I still don't like these stocks either. I think the Zoom, it might have some upward pressure because of what Spencer's saying. Index effects here. Maybe you see like Thursday, it could be one of those days it's going to go in the index and people actually sell it on those days. Sometimes the trade gets crowded to the long side. I'm not doing, that arbitrage with it, so I haven't looked into it deeply. But I just know from trading those things in the past that they have significant impacts on the price of the stock, and might be holding up because of that. Although we haven't seen the, you know, the non, although we kind of did see it yesterday. Amazon was weak yesterday. So Amazon had a weak day. So you're starting to see some of those COVID plays show some relative weakness to the overall market. It was a pretty good day for the market. I believe Amazon closed red yesterday.
Yeah, actually, at one point I looked. Microsoft, Apple, Amazon, Facebook, and Google were all red, but I mean, you know, those stocks have had, you know, just some great runs. So buying other stocks is definitely acceptable after the run. Some of those. I mean, how close is Microsoft to its all-time high? What's the all-time high?
All these stocks, like what we talked about, Shopify. It was probably, so it went up there. Look at the Shopify chart, SHOP. It's had the huge, ridiculous run. It had the ugly candle. Then it tried to get up there to make a new high. It failed yesterday to make a new high. And, you know, yes, it's trading up a little bit here. I would not want to be long Shopify right now, not on a technical basis. I love the company. I want to rebuy my shares that I sold. I still think I'm going to get a shot in the low 500s, and I hope I do. So, but with that being said, did not make a new high yesterday and then closed relatively weak. Now you get a little pop with the overall market. Shopify and Amazon are two stocks that could roll over here today with the market going higher, because this is a place where COVID money was hiding out. And now they're buying, you know, it's the dash, you know, again, for trash, the dash for the stocks that have been lagging. So your leaders could become laggards and your laggards could become leaders from the last few weeks. I'd be cautious on Amazon, and I'd be cautious on Shopify here as well.
All right, on that note, I want to wrap it up here. Looking ahead to tomorrow's show, we'll be joined by Patrick DeHaan from GasBuddy.com. We're going to talk the oil markets with Patrick tomorrow. Joel and I will be back with you at 3:40. In the meantime, you can catch a replay of this show or a replay of any previous show on our podcast or on YouTube. Thanks to our guest, Jonathan Corpina. Thanks to everyone in our chats. Please remember, all of the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day and be safe wherever you are.